More than likely, the biggest earnings this week will probably be by the company called Tesla. They announced earnings on Wednesday, July 19th, more than likely after the bell. If we go to the weekly chart, we can see price has just been screaming higher, and rightfully so. We have a pause the last couple of weeks, more than likely waiting for earnings, more than likely just resting before prices continue to move higher. My target was $300, depending on earnings. We could screen past that, or we can decline to this uptrend line, which served as support, resistance, could serve as support once again. Now, good news for Tesla is that for the second quarter, they delivered 466,000 cars. Now, some say that could be because they cut prices on their models the last several years. But nevertheless, you can't deny this growth in vehicle deliveries over the years. As you can see, it's been in a steady up increase. And again, if you tack on 466,000 cars, you're looking at roughly 900,000. So in half a year, they beat the total for 2021. Again, Wednesday is going to be a big day for Tesla. There is a bull case and there is a bear case. Let's get into the video.
He was a big thinker. Let's take it to our next guest. So joining me now is Wedbush Securities Managing Director Dan Ives, covers all things tech, a longtime bull on Tesla. Also GLJ Research founder and CEO Gordon Johnson, longtime bear on Tesla. Two very familiar faces for CNBC here. Thank you both for joining last call. Let's start with the bull case, because the bull case has been right, Dan, so far. And you've been behind this kind of thing for a good while now. The Tesla valuation, it doesn't worry you at these levels?
I mean, not at all, because I think what Kathy was talking about is our thesis that the sum of the parts in the Tesla story.
Now, the sum of the parts, what he's getting at is Tesla has the EV business. That's going to be roughly $2 trillion over the coming years. Then there's the big opportunity that Dan and Kathy Woods is talking about. It's their autonomous driving. Morgan Stanley thinks that could be 10 trillion by 2030. And then you have the energy storage business, which could be worth 8 billion over the coming years as well.
Is just starting to be discovered. I think supercharger was really where the light bulb went off in terms of Ford and GM. Now really, going to Tesla, where this is sort of what I view as a game, set, match situation. And next is going to be batteries, and then AI, which is.
So he mentioned the charging business, Tesla supercharging network. And in recent weeks, we've seen Rivian, Ford, GM, Volvo, Mercedes-Benz all say and strike deals with Teslas, utilizing their supercharging network worldwide starting in 2024. And by 2030, this could be a $3 billion revenue opportunity.
Which is why I believe this is a company that's still in the early innings of finding its potential. I think next week's another trophy case quarter in terms of for Musk and Tesla. And in my opinion, the bears will continue going into hibernation mode as Musk and Tesla flex their muscles with the next phases right now of the growth story playing out.
Gordon, you're the bear. And let me just say this, all right? And this is with all due respect, because you're a very smart man. You do your research, you do your homework. There are valuation models out there that totally agree with what you're saying.
So let's talk about Gordon Johnson for a minute. Johnson argues Musk's golden child will fall to just $24 per share by the end of by the end of 2023, as investors realize that it has built too much capacity. This represents a potential 75% plus drop from today's Tuesday's closing. Now, this article is from the beginning of the year. Beginning of the year, Tesla was trading at $100. Johnson sees that he believes Tesla's real issue is a more long-term growth problem that makes its current valuation illogical. He says this is a company that's valued for tremendous growth. Johnson says they are valued at around 2 times Toyota. Toyota sells 11 million cars a year. Tesla sells 1.3 million cars a year. So if they are valued at double Toyota, then they should be growing significantly, right? But they're not. Johnson also argues that promises from the bullish analysts and CEO Musk that Tesla will find new opportunities for growth in areas outside of EV sales should be met with suspicion. He noted that Tesla has made false promises before, including saying Tesla would have 1 million robo-taxis on the road by 2020 and that the Cybertruck would begin deliveries in 2021. So that's Gordon Johnson.
To Tesla and why it should not be trading where it is. But the market has been disagreeing with you. What is it going to take for the market to realize that you are correct in saying that Tesla is overvalued at this point?
Right. So, Dom, thanks for having me. I'll just remind you that in January and February of 2000, internet companies in both of those months doubled, and then they fell anywhere from 90% to 100%. So the market can get disassociated with reality. With respect to what Dan said, I feel like he's speaking in vagaries and platitudes. Let me explain. So with Tesla in 2Q, right, you have a company that, according to car gurus, over the past year has cut their prices 35% for their cars. Their prices have been cut 35%, whereas Ford's prices are down 1%, GM's prices are actually up 1%, and the average car on Car Gurus is down 4%. So if you cut your prices significantly, you're going to get higher volumes. However, in Q1, their earnings were down both quarter over quarter and year over year. That's not a growth company. For the fifth straight quarter in a row, they've produced more cars than they've sold, i.e. they have a demand problem. And you're talking about a company now that's going to see its gross margins drop from roughly 27% in Q2 of last year to roughly 16% in Q2 of this year. It's a car company. What car companies do is they cut prices to move metal. Tesla's doing it by the most. And remember, Warren Buffett reminded us, in 1905, if you looked at the car industry, right, there were 2,000 auto companies. Nearly every single one went bankrupt. So to choose Tesla as the leader when they're really the BlackBerry of EVs, I think is a mistake.
Okay, all right. So because I'm watching, I can see, I have the benefit of seeing both of you guys in front of me right now. Dan, you've been shaking your head pretty much the entire time Gordon's been talking. Why? He does make some interesting points here. Tesla is cutting prices, and they are producing more cars and not selling as many as they are producing. What's wrong with the argument there?
No, Gordon makes great points in terms of course, the price cuts, and that's well understood. I mean, my whole point is look at deliveries this quarter. This is a company right now that's going to be on a trajectory toward 2 million deliveries for the year. And you should look at margins. It's going to trough out over the next 1-2 quarters. Battery costs are continuing to come down, and I believe it continues to be Tesla's world. Everyone else is paying rent. The margin story, the cash flow story. And look, me and Gordon are always going to disagree here, but I think the market's telling you right now that this is an inflecting growth story because of the sum of the parts. And that's why I believe supercharger, I know that Gordon disagrees, I think batteries next and AI, I think that's why eventually we're going to be looking at a $1.5 trillion to $2 trillion company over the next 2 to 3 years.
What are the margins on the supercharger? Do you know what the margins are? They don't make any money on that. Why are you saying that's something to be excited about? You know that they make no money on that, so why are you on TV saying that that's a positive when you know it's a negative? They were forced to open up their superchargers to get the tax credits as a result of the Biden said you can't get to 7.5 unless you open up your superchargers. That's a negative, not a positive.
But Gordon, to that point, when you go out, the reason GM, the reason Ford, the reason everyone's going to Tesla, they built it, everyone's calling. And now ultimately they will be able to monetize that when you look at them to 25, 26, 27.
but they get a free supercharging network without. If you buy a Tesla car, you're going to have to wait in line behind a bunch of GM, Ford, every other automaker. This is not a positive; it's a negative. So I don't know why you're pushing this as a positive. One other thing, Dan, this is a company valued at more than the next 10 largest automakers combined, who is seeing earnings drop in Q1. They're already having to significantly slash prices, and they're not even selling what they're currently producing. And he's talking about building more factories. I mean, you have to know, this makes absolutely no sense. And I know the stock price is high, and I know you're excited about that, but stock price doesn't necessarily equal reality, and their margins are collapsing. Their sales are going to suffer because of these price cuts. And already in 2Q, they've cut prices in China, Australia, and Japan, soon to come US. So they're still having to cut prices when their competitors aren't cutting prices like they are. So supply, demand, price, they're cutting prices. That means demand is less than supply. Why is this something you're so excited about? I just don't get it.
All right, Dan, we could go on forever. I mean, this is a huge debate. I'm going to give the last word to you, Dan, because in my internal clock, I want you to respond to the litany of things that Gordon has just put out there. So the last word goes to you here, Dan, on why Gordon is wrong about the Tesla valuation.
As well as the bears, because and the reason they have been is because they view this as an auto company, and I view it as a disruptive technology company that ultimately, year by year, continues to further monetize from EVs to batteries, and I think eventually to AI. And I think Wednesday night, I think we sit here and ultimately the Bulls win again, and I think this debate will continue to go on. Gordon raises great points, but ultimately, I believe the bears.
This is the daily chart on Tesla. Again, price has been range bound for the past couple of weeks. Price is just building up some type of momentum, either to the upside or the downside. Let's draw another box around these two levels as well. So if I was a betting man, earnings is going to come down to margins. And I'm not sure which I'm not sure what they're going to report for margins. However, what I will say is if price crashes after earnings, that's your opportunity to go long. If price breaks out, don't chase price. Let it close below. Let it close above $300 and buy on pullbacks near the $300 level. Thanks for watching. Subscribe. Please like the video.